In this video, a simple and repeatable strategy on reading cryptocurrency charts and trying to understand where they may move to next. This might give you an edge when looking to trade. You might get better entries and exits for your trades or even for your kind of long-term dollar cost averaging as well. Each step in the process is linked as a timestamp down in the description below. Firstly though, we're going to go over to Binance and get some professional charting software right here. I'll leave a link to Binance in the description. They can give you up to $600 as a deposit bonus. So check that link out if you're not with Binance yet. Here are the main processes that we go through. So we're looking at a time scale. That's going to change depending on if you're a day trader or a long-term investor. And then we have candlesticks that we're going to use. I'll explain those. Trends, identifying the trend is half of the issue. Analysis in terms of using potentially some technical analysis to actually either confirm or deny or have confluence and divergence from what the chart is telling you. And then we'll go throughout the video that technicals aren't everything. You use this as a tool, but reading the market, understanding the market is much more difficult and really for me, really important as well. So we'll go through that throughout the video. So firstly, who we are as a trader is going to determine what time scale that we want to look at. If you're day trading or you want to be in and out of a trade within let's say 5 hours or a day, then you don't want to look at a chart that is plotting price over a week. Okay, because the data is not specific enough, it's too broad, it's too long, and so you can't trade off that if you're day trading. So you can just come up to the top. Again, if you don't have Binance, you can download it. That link gives you a deposit bonus, but you can actually use all these charting software for free as well. So we can go down to something like the 4 hour. The 1 week is not good for us if we want to day trade. We can go down to the 4 hour. And then we'll just reset the chart. And as you can see now, I've got a lot more information. Now, each of these candlesticks represents a 4 hour time period. And then after that 4 hours is up, the next candlestick prints. So that obviously goes hand in hand with what is a candlestick. Here's how to read it. Candlestick anatomy. You have an opening price. You have that is, at the time scale, right? So let's say it's 12 o'clock, midday. That is when the candle opens and you draw a line like this. You also plot where the price is during that time period. If it goes below the open price, you draw this stick down to whatever price that may go to. That's potentially the low, right? The lowest price it gets to within that time period, that's the low. You then draw a line if the price goes up. And of course, the highest price during that time period, that will be drawn with that line. And then you have a close price. So that close price is, let's say you're looking at an hour candlestick from 12 to 1 p.m. That is when the candle closes. Wherever the price is, you draw that closing line like this. Now, we have the open below the close. And so we color it in green because the price moved up within the time period, right? From the open to the close. And that is a candlestick. That gives you a ton of information to work off when you're trading. We then start the next candle at 1 to 2 if we're looking at an hour candlestick. So you have the open right here. You of course have the high price. You then have the low price and you draw that line to wherever it may be. And of course you have the close price as well. Now if the close price is below the open price, then guess what? We color it in red, and that is how you plot candlesticks, and that is how you read them. Gives you a lot of trading information over time. What do I mean by trading information? Well, you can use the candlesticks to predict what will happen in the next time period based on the trading action in the previous time period. This is bearish price action. So we have the open right here and the close here. You know that because it's a red candlestick. What happened during this time period is that the price opened here, it moved up, and that's bullish, but guess what happened? Whoosh. You had a massive sell-off and the price moved way lower and stayed there for the time period. Now we could suggest that that selling will carry through into the next time period, and that is how you can scalp. You can read the candles and try and scalp trade very quickly from one candle to the next. This is obviously bearish price action again. Price tried to move up, didn't make it, got forced down, lower, right? So that is just bearish price action. Even green candlesticks can be bearish because the price opened here and it closed here. But what happened in the time period is that buyers forced it all the way up to here, and during that same time period, sellers came in and forced the whole thing down almost to the open price. Now, if that selling carries on into the next time period, guess what? The price may actually fall a little bit. That is how you scalp candlesticks and scalp trade. It's the exact opposite for the bullish price action, getting forced up like this, And of course, even with a red candle, if buyers are pushing the price up towards the end of the candle, that may carry on into the next candlestick. And so you can scalp that if you want to do that type of trading. Next is to try and identify trends. If you want to trade over a longer time period and you're not looking to scalp candlesticks, then you need to identify some sort of trend, because trading with the trend is just going to give you a better probability of actually winning a trade. How do we identify the trend? A trend is simply an up or down trend based on highs and lows of candlesticks. Okay, so if you have a high and then a sell-off and then a bullish move, and that high is higher than the last one, that's known as a higher high, right? So you don't take the middle of any trend, you take the extremes. So what we can definitely see right here, I'm just going to draw this on, is a small short-term uptrend, right? You can see that right here. So we have a high price, and then you always get these fluctuations in the price, but guess what? Moves up again, and this next high is higher than the previous one. And you can see the next high is higher than the previous one still. That is starting to have a trend, right? Now, trends always break, and there's always a short period of time where you can take advantage of them. But obviously, that comes down to skill as well. But you can see the lows here. This was a low. And then when there was a sell-off, that low for that period is higher than this one. And then this low is even higher. And that is a trend. Now, you can take this to your advantage, and when you believe you're in an uptrend, what you do to give yourself a good probability is start buying when you get the sell-offs. Not at the top, that's the worst time to trade. You trade when you're in an uptrend, when you get sell-offs. Buy the dip, if you want to call it that. You buy the reversions to the mean. You buy the reversions and the sell-offs, indicating, yeah, that's a better price considering I'm still in an uptrend. Uptrends always break, which you need risk management and everything, but that is a trend, right? Where you get these higher highs and higher lows. That's a downtrend, obviously, lower highs and lower lows. You have to really check for the lows and the highs. It's not about anything else. You have to check the lows, the extremes, where you get these, pushes up and then pushes down. Where you see the price reverse, they are the highs and the lows. So you can chart that and trend. Now, you can do that for the short term. When you're trading short term, also go out to the longer time period, the 1 day, even the 1 week, and check it out, right? So that was an uptrend here, but we're in a much bigger downtrend, okay? So dependent on how long your trade is, if you're day trading, don't take too much notice of the longer term trends. If you're trading for weeks, or you want you trade open for weeks or months, you have to take more of the longer term trend into account. Within trends, something I use a lot is support and resistance. I like to feel the market. I've been in the market for well over a decade, and so I like to understand the news and events that are happening and how traders are positioned for them. That's really trading, not looking at technicals, but they can give you areas to get in at or where the price may go to, otherwise known as support and resistance. Support and resistance is where you have to see on the chart where the price is sticky. And what we mean by support and resistance is where the chart meets support to the downside and resistance to the upside. Now, support and resistance, just think of it as an area of trade where buyers and sellers meet each other and have a kind of fight with each other. And you can very clearly plot this on the chart. It's right here, and it stands out that support and resistance, right here, there is a resistance line. Why? Well, you can see that the price has moved up here twice, once here and got rejected, and then it's moved up again and it's got rejected again. Now that is resistance because the price is trying to move up and it got rejected at a resistance. Now if we look at this price, that happens to be 25,000. Well, that's a round number, and traders, of course, short-term trading, trade around, round numbers, and that makes a lot of sense as a trader. Now we look for support. Where is support? Well, that is where to the downside, you get buyers coming in and pushing the price up. Now, there was a support level here, there was one here, and if we look to the chart recently, there was a support level here as well. So what we're going to do is draw a line there as well. So we're going to redraw that resistance, that's around here, and then we're going to draw the support, which is around here. Now, for me, support and resistance is not a line, but an area, right? You can just think of it as an area. But if we look at this resistance price, that's around 19,000. You could say around 20,000 for that as well. So what I like to do sometimes as well is actually just draw a rectangle here and not a line to show an area where you think the trade might meet support and meet resistance. Now within this as well, you can also draw intermediate support and resistance levels as well, which is, as you can see around here, the price meets some sort of support and resistance, and buyers and sellers kind of have a fight there as well. That happened twice, 3 times. So you can draw in major support and resistance and then minor within that where you think trade may go. So putting together what we know about candlesticks now and support and resistance, we can potentially just trade off of that. So for example, recently a bit of news came out in the market that was not great for Bitcoin and wasn't great for the market in general, and the market started selling off. Now remember, we can read these candlesticks and we can say, well, if there's a negative candlestick trade in one time period, that may move through to the other time period. And that's what started happening here. Now, as you can see, the price broke through this support and resistance level and did not meet support. And that usually means that the price will now go lower and potentially search for the next level of support. The next level of support, minor support, would be this one here. As you can see, a lot of trade around that. So just using what we know about candlesticks and also support and resistance levels that give us entry and exits for our trades, you can therefore say this was a negative candle and we've broken this support level, and so we could enter a short position here and open and close that position down at this level when it meets the next support. So hopefully that makes sense in that you can see a short position. Now, if you don't know what long and short positions are and everything like that, other videos in the description. I go through trading futures and short positions, long positions in the crypto course as well. So check that out in the description. It's got 200 videos and goes step by step through everything. But as you can see here, a candlestick, we can suggest that the selling will continue. We put a short position in here. We put our take profit at the next support level, and then you can put your stop loss quite tight as a kind of scalp trade. The profit was 6%. So that is a fantastic scalp trade using candlestick knowledge and support and resistance lines. And that's it. Now there's way more to technical analysis, and so I'll leave some helpful videos in the description. I go through all of that in my crypto course as well. So if that's interesting for you, check that out, linked in the description as well. And you can get a deposit bonus on Binance as well, all down there. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.